British American Tobacco, stock ticker BTI, is currently trading at $38.15. Year to date, they are down 5.5%, and over the last year, they are down 19.14%. And from the latest earnings call, there was indeed some bad news. The management has decided to suspend the stock buyback for now. British American Tobacco usually works within a framework where they want an average payout ratio of 65% and a leverage of around 2 to 3 times adjusted EBITDA. In light of the uncertain macro environment and higher interest rates, the board has decided to prioritize to strengthen the balance sheet and thus to get their debt down a bit, and thus will suspend the stock buybacks. But let's jump into a stock screener to see whether or not BTI could be a potential buy at the current levels. One of the main reasons to buy BTI would be the dividend yield. It's almost 7% with a payout ratio of around 60% right now, which is pretty healthy. And when they are focusing on strengthening the balance sheet even more, this gets even better in the future. Some of my favorite metrics, for example, the EPS growth to be above 10%. It is a slow grower, so 3% is pretty fine. It has a very low beta, so it's very involatile compared to the overall market. And return on equity around 10%, which is also pretty fine. And you can see here the net debt to EBITDA is 3.1. And as mentioned just before, they would like it to be around 2.5. So they are prioritizing to get the debt down. If we jump into some of the dividend data, you can see here that they are paying out a pretty fine dividend as mentioned before. The growth rate is a bit sketchy. Sometimes it's up, sometimes it's a bit down, but they are in general over the last 10 years growing the dividend at 1.5% per year. So even though this is a slow grower, they are prioritizing dividend, and with the dividend being around 7%, it is still a very, very nice income source. Coming down here, you can see from the dividend yield chart that if you went back a few years, there was a massive discount to be had, but now it looks more like there is a slight discount on the 5-year dividend chart over here, and the PE ratio is also in line with the 5-year average. And if we jump down here to the cumulative rate of return, you can also see that the red line is the S&P 500. So if you've just chosen to invest in British American Tobacco, you would actually be at deficit. Obviously, you would have a lot of dividends on the side, but if you are looking for capital appreciation, British American Tobacco is not the stock. But let's jump into our different valuation models, where we first have the Graham's revised valuation model, where we take the EPS growth of a PE of a no growth company combined with the growth rate, where I have put in 5 based on the management's guidance, average yield of AAA corporate bonds, and the current yield of AAA corporate bonds. We arrive at an intrinsic value of $42.12. Next is the discounted cash flow model, where we do have the free cash flow from the different years using an applied growth rate of 5%, which I think is very, very fine for a company that is so focused on the free cash flow as British American Tobacco is. We do take the free cash flow projected into the future using the growth rate, discount that back to a present value of the future free cash flow, combining that with their current cash and cash equivalent on hand, subtracting their total debt. We arrive at an equity value divided by the shares outstanding. We have a fair value of $83.64 per share. With the dividend discount model, we take the dividend payout from the different years, applying a very, very modest growth rate from the dividend data we saw before, combining with a very healthy weighted average cost of capital of just 5%, we arrive at an intrinsic value of $74.74. For multiples valuation, obviously we compare them to companies such as Altria Group and Universal Corp and Philip Morris, and we arrive at a stock price of $48.54. For the free cash flow valuation, for some reason the free cash flow per share, I couldn't get the API to pull that out. So even though this says 195, this is not correct. The same with the Peter Lynch model, those were not correct. So before we jump into the summary, thank you so much for watching, and if you've come so far, please subscribe to the channel and like the video. Let's jump into the summary, where we do have all our valuation models. As mentioned, the free cash flow model didn't work out in this one, and Peter Lynch as well I also exclude. We then arrive at an average intrinsic value of $62.26. With the current price of $38, it could appear that there's an average current discount of 38%. Even if we apply a very safe margin of safety of, let's say, 30%, then the acceptable buy price should be around $43. So if you are looking for a high income stock such as British American Tobacco with a very healthy dividend, I would say British American Tobacco is definitely a company you would need to look more into. and I think also there could be some room for some capital appreciation. Thank you again so much for watching, and I'll be seeing you in the next one.